The secret mental trick every losing forex trader ignores that could make you rich. Most forex traders don't lose because they can't read charts. They lose because they react to price before they understand themselves. The market doesn't punish ignorance, it punishes impulsive response. And the most dangerous thing about that is that it feels completely normal. A trader stands in front of a moving forex chart. Every candle flickers, every tick pulls at his attention. His body tightens before his mind speaks. He tells himself he is calm, but his hand moves anyway. The trader opens his trading platform, Euro against US dollar, GBP against US dollar, USD against Japanese yen. Nothing unusual, just another trading day. Price moves a few pips against him, not enough to matter, but enough to be noticed. His chest tightens, not panic, pressure. His smooth voice whispers, do something. He adjusts the stop, then watches, then adjusts again. Nothing dramatic happens. That's the danger. Losses in forex rarely arrive as disaster. They arrive as patterns. The invisible problem is not losing trade, it's automatic reaction. Forex is always open, always moving, always inviting response. So without realizing it, the trader learns a habit. If price moves, I should act. Movement feels like opportunity, but movement is constant. Opportunity is rare. The trader enters trades quickly, exits early, re-enters when price moves without him. Everything feels logical in the moment. That's why the circle survives. He walks the same loop every day, different candles, same behavior. Forex doesn't train accounts suddenly, it drains them quietly. The first trap is overexposure. Too many peers, too many sessions, too many chances to interfere. Charts surround the trader. Each one demands attention. The second trap is urgency. Price moves fast, so the mind assumes decisions must be fast. But speed helps brokers, not traders. The clock ticks louder. The trader rushes. Then comes confirmation. Indicators stack up. Signals overlap. Confidence shifts away from judgment and into tools. Price becomes harder to see beneath the noise. And then the most dangerous thought appears. I need to make it back today. At that moment, risk is no longer calculated, it is emotional. Forex rewards patience, but the brain seeks relief. Zoom out. Weeks pass, then months. The trader reviews his history. Wins appear here and there, losses are frequent. Break-even feels like progress. The equity curve moves sideways, but the deeper cause is internal. He trusts higher time frames less. He abandons plans mid-trade. He feels restless during quiet markets. Silence becomes uncomfortable. He stares at the screen, waiting for something to happen. Eventually, Forex stops feeling like analysis and starts feeling like pressure. The account survives, but the trader stagnates. Most Forex journey end this way, not with a blow up, with exhaustion. One session, something different happens. Price reaches his level. The setup is there. His plan says wait. His body says enter. He feels the urge clearly, strong, familiar. He doesn't click, not because he is disciplined, because he is curious. He steps back. For the first time, he notices something. Every bad forex trade he remembers felt urgent, not thoughtful, urgent. This realization doesn't change the market, but it changes how he sees himself. Here is the principle forex traders losing ignore. The market does not pay you for being early, it pays you for being aligned. Price will move with or without you. Your job is not to catch everything. Your job is to participate selectively. In Forex, the edge is not prediction, it is response control. Waiting filters emotion, pausing removes impulse. Structure protects capital. This applies everywhere. Scalpers, day traders, swing traders, prop firm traders, different style, same psychology. The trader changes one thing before every trade he pauses. Not minutes, seconds. Just enough space for impulse to fade. He asks himself, is this trade plan? Is my risk fixed? Will I take this trade again tomorrow? Most emotional trades fail quietly. It limits his environment, fewer pairs, defined sessions, a maximum number of trades. Forex becomes slower, discomfort appears because boredom feels unproductive. But boredom is where consistency lives. Months pass, the trader's posture changes. He trades less but thinks more. Loss is no longer trigger revenge, which no longer trigger urgency. He respects the market's rhythm. Forex stops feeling like a battle. It becomes a process. He no longer chases waves. He manages himself. Most forex traders ask, which strategy works? Few ask, who am I when price moves against me? The market will always test reaction, not knowledge. The trader who learns to pause is the trader who lasts. The trader stands still as the candles move around him. And for the first time, nothing feels urgent.